We're going to do a brief video on NVDA, that's Nvidia Stock Analysis. We've got a daily chart on here for you, and this is a 5-day in green moving average, a 20-day in red moving average, and a blue 200-day moving average. Let's take a look just real quick at the backstory. This stock broke its 200-day moving average back in April of 2022 and entered a bear market, as we can see. It's still in a bear market. You can see we had great respect for the 20-day moving average, and then we essentially have been going sideways until about the third week in August, where we had a breakdown, and that's leading us to where we are today. You can see the sideways action oscillating around the roughly 168 mark above and below, and we're now entering into a different phase for Nvidia on this stock analysis. Let's take a look. We have a price that's below the 200-day, below the 20-day moving average, below the 5-day moving average, and gapping down low here like this, which is never a good sign and kind of unusual. This stock has a few gaps in it. If you look carefully, you can see one right here is this one right here. Little gap here. Stocks that gap are always a concern. This gap right here, you have to be careful. You can get spanked real bad trading a stock that gaps. You wake up and you have a problem. So this stock does gap, but it's unusual to see a big stock like this gap to the downside like this. That's not good. But what we have from a technical perspective using moving averages, and it's all from my opinion only for entertainment purposes only, is a stock that looks like it's begging to go down lower. So when you have this much distance between a 5-day moving average and price, especially with the gap, it's an indicator that the price is going to go lower. I'm hesitant to say that because it's already down quite a bit. It's already making new lows, but that's what it looks like to me. Again, my opinion only. We need to, from a technical perspective, we need to rally back up here to about 159 from where we are now. But it's entirely possible, just to stay normal, we need to get back up here 145-ish, 150-ish, and bounce off against what would then be a 20-day moving average coming down there providing resistance. But that does not mean that you couldn't get a good sell-off in this stock from here. It's very, very difficult to say what that sell-off would look like. As you can see, there's some resistance back here at this point in March, right, or I should say supported around the 116 level. I don't put a whole lot of stock in that, but some people will put stock in that. So that's where I see significant support should come up around 116, but I'm not suggesting it's going to sell all the way down there and test it. I think it's too early to say that, but it could easily do that. But from a technical perspective, right now we're below the 5-day, we're below the 20-day, below the 200-day. The stock's still in a solid bear market. It's broken out of its sideways movement that it was in essentially all summer long, and it could potentially be headed lower. In the near term, I would look for a short-term rally, again, in the 150s range. But you could, before that, get a sell-off down as low as potentially in the low 120s. Would not be beyond the realm of possibility. Let's see what RBAM research says about it. We cover this with our algorithmically generated prices. These are 1, 5, and 20-day columns here. In the 1-day column, it says to buy around, or suggested price to look to buy at about 132.84. I don't think it's hit that yet. Let's check it. 132.84. This price is 133.50 and 137.60, so I don't think it's hit there. It is not hit that. Some of these, it looks like you could have got in already. Let me go back and check again. My mind's not keeping these prices in its memory. Yeah, some of these have been hit. The 5 and the 20-day have been hit, and so assuming your own analysis validates it, you could take a look at getting in the market at these 5 and 20-day prices. Now, again, the way this works is you get in today, hold worst case 5 days, close it out at a loss if you haven't taken a profit sooner. Same thing for the 20-day column. Get in today. Again, assuming your own analysis says it's a good idea and you can't use our prices for anything other than entertainment. But if you wanted to get in at a price similar to that, get in today, hold worst case 20 days, close out for a loss if you didn't get a profit, or take your profit as soon as you get them. All these are take your profits as soon as you get them, close them out at a loss, worst case at the end of the prescribed holding period. These come out every morning before 7 a.m. These are current for today, 9/6. That's today. And you can get them all free, absolutely no credit card required, at rbamresearch.com. That's rbamresearch.com. There's a link in the description below. We cover 190 stocks like the ones I just showed you. We cover the major forex pairs. We cover crypto, BTC, and we cover the most liquid futures. Everything but the stocks are longs or shorts, and stocks on this program that we have out now are just longs. And again, absolutely no credit card required, absolutely free at rbamresearch.com. All out by 7 a.m. Monday through Friday. If you like these videos, please hit the like button. If you want to see more, please subscribe. Please leave us a great comment in the comment section below. If you have a way to improve our videos, we'd love to hear it. Everything you've heard on here is for entertainment purposes only, especially the entry prices. You can't use them for anything other than entertainment. Keep in mind, all analysis is for opinion, and for entertainment purposes only, and you definitely trade at your own risk.